The ECB is calling for urgent action, but what comes next? ECB President Lagarde is urging EU leaders to act and act fast, warning that the bloc must strengthen its foundations as growth slows, productivity lags and competitiveness comes under pressure. So as leaders gather for a one-day retreat to set priorities, how exposed is the Eurozone economy right now? Luca Penarola is Senior Europe Economist for BNP Paribas Markets 360. So Luca, the ECB is sounding the alarm on weak productivity and sluggish growth, but are their concerns justified?
Definitely the European economy is facing some structural challenges that need to be addressed with reform and probably public investment. Now, I would like to make the distinction, though, between these long-term challenges and what the ECB is saying about the cyclical outlook. Because yes, the ECB is sounding these alarm bells to an extent. However, it also underscored how the European economy was very resilient last year, despite all of the global headwinds that the economy faced. Think about rising trade tariffs, geopolitical uncertainty. The economy still grew at a good pace, and we expect actually growth in 2026 will be better thanks to the deployment of the German investment package.
Let's talk about that package. There's optimism that higher German spending would help European growth, but looking at their industrial production numbers, weakness is persisting. Is that fiscal boom really helping?
Yes, so that's a very good point. Industrial production in December was weak. It went down around 2% on a monthly basis. However, if you look at factory orders, so let's say the demand for industrial products, that went up 8% month on month in the same month. So although the cyclical position is still not very strong, there is evidence that demand is increasing for industrial production in Germany, and we think that eventually this will turn into actual production as well. So the government has started to spend these funds. Demand is accumulating. Eventually this will turn into production as well.
Well, there is confidence that inflation will stabilise. It is dependent, though, in part on moderating wage growth. But the ECB's tracker suggests that pay pressures could pick up later this year. Does that complicate the outlook?
I don't think that complicates the outlook because, indeed, pay pressures are expected to go slightly up from the low that we saw in Q4 2025, according to the ECB wage tracker. However, if we look at the average of 2025 compared to the average of 2026, we're still looking for a slight downward decline on a year-on-year basis. On top of this, the level at which the wage tracker of the ECB is expected to stabilize at the end of 26 is around 2.7% year on year, which is not inconsistent with inflation at target, i.e. 2%.
Meanwhile, some are worrying about inflation undershoot, especially with the euro strengthening. So how significant is a stronger euro as a headwind?
Well, indeed, the euro has appreciated a lot, but that already took place during 2025. And we saw, let's say, a further appreciation in 2026. However, as the ECB has said in their press conference just a few days ago, a stronger euro is already embedded in the projections. So when we see a projection of, let's say, inflation undershooting a little bit in 2026, that already takes into account a stronger euro.
So taking that all in mind, do you still expect the ECB to sit tight for the rest of the year?
Yes, we think the ECB will not move interest rates in 2026. As a matter of fact, although we expect growth to be stronger, we think inflation will react with a delay, and therefore we only project stronger price pressures from 2027 onwards. So we think the ECB will maintain rates unchanged during 2026 and maintain this, let's say, guidance, which is relatively vague and just around data dependence, while in 2027, after you have more evidence that the economy has been strong for a longer time and you have evidence of price pressures accumulating due to domestic demand, that's when we think the ECB will react, and we see them hiking interest rates twice towards the end of 2027.
To finally look at the ECB have revived the idea of a common euro area safe asset to strengthen the financial stability. Could this finally gain traction and move from theory to reality?
Yes, well, to an extent, EU common issuance is already reality, in the sense that there are already programs that are financed with the EU common issuance. Think about the Next Generation EU that helped many countries with the recovery from the COVID-19 pandemic, or more recently, the SAFE program that helps countries finance defense investment via loans that are financed again with the European common issuance. Now, the question is whether common issuance will remain a feature of the architecture of the European Commission, or it was just a one-time exception to a rule which is for no common issuance. Our bias is to think that we will make more progress towards more common issuance. History suggests to us that this progress, though, is not very linear and it's very project dependent. So for us, us, the easiest way forward is more common issuance related to specific projects. But indeed, we think that this is a topic that will remain definitely on the table.
That was Luca Penarola from BNP Paribas Markets 360. Don't forget, you can watch more videos on Reuters.com.